Hello, good people. This is Darrell with Personal Credit Solutions, and we are here to provide credit education for beginners and advanced credit consumers. I do want you guys to remember, no matter what, bad credit is usually a temporary thing. If you work on it, anyone can have good credit. Now, the purpose of our YouTube videos are to provide credit education to our clients and to help them better understand the credit repair process. So unlike many other YouTubers who have credit repair channels, my goal is to speak to my clients primarily. These are topics we discuss all the time, and I really want to make it easier for everyone to get good answers and good personal financial consultation for their credit. Okay, and for their goals. So let's take a look. So today I want to talk about what makes a good credit score and how to improve your credit scores. This seems very simple, but I find that in my experience, there are many customers I meet that are not aware of how to really focus on the right actions that raise your credit scores. As you can see, this is from Security National Bank of South Dakota, just an article, many articles out here like this. If you guys were to Google and search some of these questions you have, you'll find answers, qualified answers, quite a few places. Now, your credit history and your scores are important. We all know that, especially if you plan to buy a house. I find that the large majority of my customers are trying to purchase homes. So we want to definitely assist you in that process. So one of our services is to help you guys get financing of any kind. So if you want to buy a home, auto, personal loan, credit cards, these things we want to help you get. We don't charge anything extra for that, and no one pays us to offer you credit. We're going to do the basic foundational things to build your credit. Get your credit in good shape, and you will be able to qualify for things just because your credit is in good shape, right? So what is a credit score? It's a rating of your credit history. As you see here, used on a scale of 300 to 850. This is what lenders use to decide whether or not they're going to lend you money, right? And at what rate. So those with higher credit scores, of course, are a lower risk. So if there's a lower risk, there's a lower rate. So this is why we always hear these commercials and advertisements and marketing telling you you're going to get lower rates with higher scores. What is the difference between a credit score and a credit report? I'm not really going to get into that because, I want to keep this video short, and we all know the difference between a credit report and a credit score, right? But your credit history is very important, okay? So you definitely are going to be looked at two ways by your lenders. They're going to look at your credit history, and they're going to look at your score. I find that a lot of our clients are not aware of what FICO stands for, and they're not aware of the fact that there are two different types of scores. I do have a video I'll be doing that explains the different types of scoring that are out there. Okay, there's mainly two types of scores, the Vantage score and the FICO score. The way I like to say it is you have the FICO score and you have the FICO score, because the Vantage score or FICO score is not going to do you much good. All your creditors use the FICO score in order to get you credit, and that's the specific type of credit score that is more accurate. Okay, and the FICO actually stands for Fair Isaac Corporation, which is a company that uses worldwide networks of partners to help banks tell how likely a customer is to pay their debt obligations. So they're basically just rating you. They're rating your risk. And what makes you more risky is when you're not paying other creditors. So I do want you guys to think about something. You're getting your credit repaired. Change your credit habits along the way. Don't max your credit cards out. This is never going to work. You're going to have to break that habit. Don't get too many credit cards. Don't do the things you know are wrong. Don't co-sign for your friends and family. Don't get a bunch of cars for everybody that you love. You have to keep your debts down. Keep everything in control so you can take care of your own credit. Nobody's going to do that but you. All right? They're saying here you need a good credit score. If your credit score is low, you have less chance of getting approved. We all know this, right? So we're not going to stick on that. Now, I do want to look at the ratings let's take a look at this. Now, it is a little bit different for the banks than it is for the credit bureaus. What you're looking at is a chart, and I'm going to enlarge it a little bit. You're looking at a chart that tells you how the credit bureaus rate your scores. We have very poor, poor, fair, good, and excellent, right? But the banks are really looking at this area, people. They want you to be at 640 to 720. We know now that you can get a house now for 620, right? Now the lenders and the mortgage companies, they really do want you to have a 640, preferably, but they can go as low as 620 now. Now we all know that if you have a 640 to 720, you're really not going to have trouble getting most credit. But that's considered fair by the credit bureaus. But by the banking system, that is considered good. All right, 720 to 780, that's A plus credit. That's really good credit. Now, 780 to 850, of course we know that's excellent credit. Now listen, my good people, you're not going to come and have 780s to 850s going through a 6-month credit repair program. You're going to be in these two areas, right? And the people who are in the 720 to 780s are going to be the cream of the crop. They're going to be the top level people who typically probably came in with lots of good credit history, because that's how you get the higher scores. You're not getting a 780 to 850 without multiple years of credit. And let's talk about that right now. What is considered a good credit score rating? Well, we know that the range is between 300 and 850, but what do you need to buy a house? What are banks looking for? What do they consider a good credit rating? It's going to be based on those scores we talked about there, 640 to 720. But what is the makeup of your credit score? It's right here. This is what I have to talk about every day, all day with my clients. The length of history, the types of credit, the payment history, inquiries or new accounts, and the amounts owed. Now, we all know you have to pay your bills on time. I usually don't spend a lot of time talking about this because I haven't met too many people that don't know if they don't pay their bills on time, their credit is going to be bad. Everyone knows that. Now, if you want to really improve your credit, this is the best way to do it right here. 30% on your revolving credit lines. Revolving credit is credit cards, credit lines, and charge cards. Charge cards are cards where you can only buy from that store, right? Like Walmart, JCPenney, Belk, right? Victoria's Secret. These are charge cards. You can only buy from that store. Fingerhut is a very popular charge card. We promote them a lot. Of course, credit cards and credit lines are also in this category. Now, I do not want you guys to focus at 30%. I want you to go lower, because if you keep your credit lines at 30%, how easy is it to go over? The interest on your credit card that month could take you over. So you want to make sure you stay under 30%. All right? The rate that I tell my clients to stay at is to 25%. I want you guys to stay at 20 to 25% so you're not risking getting close to the 30%. I always say I don't recommend 30% because my clients will dance all over 30% and have a party and wake up the next morning at 31%, 32, 35. You're going to lose points automatically when you go over that 30%. 10, 15 points, you're going to go down each time. All right, so you want to make sure that you focus on that. Inquiries are 15% of your credit score. So that means I don't want you having any inquiries throughout the time you're working with us. Too many new credit inquiries can lower your credit score, right? Obviously. Multiple inquiries for the same auto or home, they don't affect you as much. Okay? You do want to keep these balances under 30%. Keep your bills paid on time. Credit mix is a good 10%. Having different types of accounts like loans, credit cards, mortgages, and then the amount of time you've had your credit accounts is 10%. But if we really look at it, the new inquiries, paying your bills on time here, and keeping your balance under 30% is 80. That totals 80% of your credit score. If you want to improve your credit, you're going to focus on these three categories. Now, I do want to say that if you want to repair your credit, it's time to break old habits. So people, we have to break these old habits. We have to get rid of thinking we can charge our credit cards up to the max. We have to stop living on them. We can't charge on them and then expect that we're going to have good scores. I have so many people who have good credit accounts, but they have high balances, and it's affecting their credit significantly. I do probably 4 or 5 phone calls a day explaining this to clients. So remember this, all right? I'm going to leave it just like this. I'm going to close this out to keep the video from being too long. Focus on your credit cards and your charge cards and any credit lines that you might have. Keep those at 20 to 25%, not 30%, okay? Keep them lower than that. Instead of getting a minus, get an A plus, get an A. Don't keep settling for low scores, okay? No inquiries while you're working on your credit. Keep your inquiries down to no more than 5 a year. That sounds hard, but if you want to get the best out of your inquiries, no more than 5 a year. And of course, always pay your bills on time. All right, I'm going to call it there. Thank you all for watching the video, and we'll get another one out for you right away. Thank you.